Hey, this is Khalid Nathan Aleem, Realtor with Remax, and welcome to the Real Estate Board channel. Today, we're going to talk about the 5 questions you should ask yourself before you refinance your mortgage. Number 1 is, how long will I stay in the home? Now, the first couple of years of you after buying a home, most of your monthly payment is going to be going to interest. For example, if your monthly payment was $100, then $80, for example, would be going to interest and only $20 would be going to principal. So when you refinance, you incur closing costs. So you got to ask yourself, the money that I'm going to be saving for refinancing, how long will it take for me to recoup those closing costs? Okay. Number 2 is, how much will I save? Again, you have to know how much you're going to save. Now, when you refinance, the rule of thumb is that the interest rate that you refinance to should be 50 basis points or more. So if your new payment going to offset that closing cost? You see how this closing cost comes over and over again, okay? So that's number 2. Number 3 is, am I paying mortgage insurance? Now, there's 2 reasons why you would pay mortgage insurance. And somebody may say, what is mortgage insurance? Mortgage insurance is something that only benefits the lender, okay? It doesn't benefit the buyer. It's insurance that the buyer pays for, that the lender gets the benefit if a person was to default. And it only happens in 2 particular situations. Number 1 is if a person gets an FHA loan, and number 2, if a person has 20% or less equity in the property. Okay, so you really need to know what type of loan are you getting into. Because if a person is refinancing, for example, from a conventional loan to a FHA loan, then they'll have the mortgage insurance. So you definitely want to make sure that you're aware of, okay, this loan that I'm about to get into, does it have mortgage insurance or doesn't it have mortgage insurance? Okay. And now number 4 is your financial house in order? When you go to do an application, a lot of lenders say that they turn people down for 2 reasons. Number 1 is that the person or the buyer has a high debt to income ratio. All right. And number 2 is poor credit history. So you really want to be aware of your financial situation. How's your debt to income? If it's too high, don't even bother as far as financing. Okay. Get that in order first. And your credit history also. If you have a poor credit history, you definitely want to get that work done also. Okay. And last but not least, will the existing lender cut you a deal? All right. If you're looking to refinance, you already have a mortgage somewhere. So before you go off to somebody else, check with your current lender and say, hey, I'm shopping around. I'm looking to refinance. What could you do for me? Because a lot of them want to keep the business. Okay. What's the sense in if you sell it out to somebody else, then somebody else gets the fruit. All right. So they really want to keep your business. So check with your current lender and make sure, hey, I'm about to leave. I'm shopping. Is there anything that you can do for me? They probably could cut you a good break. Okay. And that's all we have for today. Again, this is Khalid Nathan Aleem. And if you're looking to buy a home, sell a home, or invest in real estate, I got you. Take care.